By the way, he also spoke about the kind of interest that L&T Technology will receive. The second public issue from the L&T Group this year, L&T Technology Services, opens for subscription today, and the L&T Group Chairman A.M. Nayak is quite confident of touching the $1 billion revenue mark by 2021. In a candid interview with CNBC TV18's Kritika Saxena, he explained the rationale behind having two different listed IT companies and explained how he plans to create synergies between the two.
First of all, this is not expensive at all, because if you see the Bain Capital who invested in Quest, they invested at 16.5 multiple, right? We trailing, going forward maybe 16 or 15.5 multiple. We have actually, though this being a very premium company, have priced at 15.5. So we are giving a very attractive price, and as such, I expect that this the script will overperform, because there is not any other company of this kind which has come in the market and will easily come in the market.
But then, sir, why are analysts comparing it directly to the listed peers that you have, and thereby calling it a slightly more expensive proposition?
Look at our growth rates, right? Our growth rate over the last 3 years has been 16% in dollar terms and 23% in rupee terms. That is higher than the industry. That's one. Second is that this is in spite of the fact that last year we decided to clean up a lot of our client base.
81 companies which were tiny accounts.
Non-performing accounts.
No, I mean less than $1 million.
Okay.
We said, let's not put our resources on it, and we took them out. With that went away $19 million worth of business. I could have removed all of them after the IPO and shown higher growth.
Yeah.
But what doesn't agree with my conscience, that why, when we know it's not performing, take it to the market. Let's take a clean company. And that is what is all about L&T, corporate governance, integrity, and all for which L&T gets premium over anyone else, that you get what you see.
So doubling revenues by in the next 4 to 5 years. So say by 2021, can I say $1 billion is the target, Mr. Nayak?
I think you can easily say that smilingly.
$1 billion, all right. And how much of this would be acquisitions? How aggressive would you go?
I said 150 to 200 million could be acquisition, but certainly moving from 460 to 800 to 850 is organic. And that is at that 15-16% annually. They keep telling me that you give us a light target, but we are very interested to take a tighter and higher target.
Is he being too hard on you? Is he being too aggressive?
No, not at all. I never put any.
So how much more can margins inch up immediately in the next, say, FY17, FY18? How much more can utilization inch up?
The utilization, we believe, is a healthy band is 75 to 80%, and we are already at 76. Depending on the seasonality, which quarter you are talking about, how many freshers, by the way, these include the trainees. Yeah. So which quarter you get more college hires inside, depending on that, the utilization will fluctuate between quarters. But we want to keep it between 75 to 80, because anything above 80 is detrimental for growth.
And margins?
Margin I already talked about. We are at 18.6 as per Ind AS in Q1. Little bit improvement is possible. Further improvement will come from...
how much? Say 21%?
I won't put a number.
You won't put a number. Okay, fair enough. Constant currency growth 11.3%, if I'm correct, the last fiscal. So by the end of this fiscal and FY18, what is the band that you want to maintain at?
I think Mr. Nayak did talk about over the next 5 years the kind of growth rate we want to achieve. All I would say additional to that is that we should grow faster than the industry.
Okay.
And industry growth rates have been predicted by third parties at anywhere between 13 to 14%.
But does it worry you, Mr. Nayak, that the entire ecosystem is changing, clients are changing, BFS is completely, the large banks are completely shifting their focus now. Does it worry you? And how prepared are you from a L&T Tech Services perspective, L&T Infotech perspective, to grab the changing times or the changing volatility and get the right clients?
What is common for both is that our entire journey to high-tech, new age technology, digital, all of that which applies to both will have to be tremendously accelerated. Transformation of the company to face with the new reality of life has to happen very rapidly.
Are clients cutting costs right now across the board?
That is, of course, we are cutting.
Clients are right now in a cost-cutting mode, so then you have to. So would you look at increasing investments in terms of building the digital capability, building the automation? How much more would you invest, from a group level
I think
into L&T technology?
we are right now, because even if you acquire digital in the pure play IT company, its ability to use and perfect it is limited. So therefore, we are now taking digital solution within the company.
Within the company.
We are signing some partnership. We will do that sometime, hopefully this month, one or two of them. They are very impact-creating technologies.
But I'm trying to understand, how long will the volatility remain? You've spoken to clients, you've understood this industry. How long will the volatility remain?
In my view, till such time the new age technology becomes mature enough and the companies which are providing service become competent enough, next 2 years are likely to be
2 years.
seeing some degree of volatility.
Throughout the last couple of years, you have been working on an unlocking value drive across the group. How does L&T Tech fit into the group plans as a whole? How will the proceeds be used, and what is the larger learning for you?
Now, I need a steady company, services company. So we have said we must bring down the project exposure, which is risky, to 70%, if not 65, but at least 70. We must take our services business at least to 15%, which includes L&T Finance, which includes L&T Technology, L&T Infotech, and as long as it is our land and therefore no risk, L&T Reality. And 10 to 12% will be a super high-tech manufacturing. We are going to exit from all routine kind of products.
Okay.
And that will happen over the next...
So by routine products, sir, what do you mean? So what are the routine products that you talk about in terms of exiting?
Well, I mean routine, I don't mean they are routine. By anybody else's standard, they are high-tech. But by our standard that we want to be in nuclear, we want to be in submarine, we want to be in defense, we want to be in major gun program, we want to be in lot of such products which are in aerospace industry, aeronautic industry, nuclear industry, defense industry.
Okay.
Now compared to that, they are somewhat lower. But compared to what most people know, they are higher.
So what are the sectors that you will exit then?
No, I can't tell you that.
Okay.